Okay, welcome to the new month of May already. We are already in the month of May. Right, let's go to the news. And what's news that's more important than today? That is the FOMC update. I think it's very, very important for people to understand what was announced, what just happened, and what does it mean going forward. Yeah. So as widely anticipated, the Federal Reserve maintained the Fed funds target rate range at 5.25 to 5.5, right? This unanimous decision was straightforward, given that inflation remains significantly high. The data in the last 4 months have proven that, and consumer spending is robust and the US jobs market continue to perform well. All these things, it's not a surprise to us, okay, that they did not cut any rates. The official statement noted in recent months, there has been a lack of further progress towards the committee's 2% inflation objective. Consequently, it stated the committee does not expect it to be appropriate to reduce interest rates until it has gained greater confidence that inflation is moving sustainably towards 2%, right? So this is in a way telling us, right, hey, we told you there will be 3 rate cuts. We are still maintaining that. We are not saying anything. But yeah, probably we would not cut rates as early as you all think. That's the message that's being sent out. However, an unexpected announcement was the reduction of Federal Reserve monthly quantitative tightening, or QT, from 95 billion to 60 billion. So just to give you an idea, while QE, quantitative easing, involves the central bank purchasing financial assets to inject liquidity into the economy, quantitative tightening, or QT, involves the selling of assets or allowing them to mature without reinvesting the proceeds, which remove liquidity from the financial system. Yeah, okay. So reducing QT means the Fed is removing less liquidity from the financial system than planned. This can lead to more money being available in the financial system. So stock market might react positively to the reduction in QT because it implies a more accommodative monetary policy stance than anticipated, especially if Fed Chair Powell signals further QT is on the cards. This is my mistake here. Is on the cards in the coming meeting. Okay. So the likelihood of the Fed cutting interest rates on June 12th was 9% before the meeting, is since dropped to 6%. For the July and September meetings, the probability stands at 22% and 46% respectively. So even right now, September also is a question mark. Okay, but then again, all these probabilities, September is still a bit far away. But those that are in the single digit ones like June, you can safely say probably you won't see anything already, any rate cuts during that time. So what you have is the July and September ones only. Okay, so that's one thing that we need to be clear of. So Fed Chair Powell reiterated that his recent statements that gaining confidence in decreasing inflation and the ability to lower interest rates is taking longer than thought. And he is unsure if it will be achieved this year. Now, eventually, when Fed does cut rates, it will signal another phase of easing monetary conditions. Interest rates on mortgages will decrease, benefiting stock markets and cryptocurrencies due to looser monetary environment. Okay. However, this is not going to happen straight away. It will be in a phase process starting with QT. They are doing that right now already. Okay. So we need to see whether Fed is going to continue to reduce that 65 billion to a lower one. Okay. And this will then be followed by rate cuts. So expect the June meeting, probably the July one also. If they continue to cut to cut this QT, continue with the QT, then yes, it's a good thing. And this will be followed by rate cuts and eventually a reintroduction of quantitative easing, a scenario under which both stock markets and cryptocurrencies are expected to surge to the influx of easy money. Now, when we talk about QE, right, probably you won't see it this year. Okay, you won't see it this year. If anything, it would probably be next year. So this process is how it's going to be, but definitely when you have this QE, you would see the next stock market boom. That has been the way the stock market is moving with all these new monetary policies that we've been seeing in the last 20-30 years already. So every time they do QE, the market flies. So if you don't need to go back that far, look at when Obama did that for the subprime crisis way back in 2008, then you will understand how this process works. Okay, so with that's the fundamental report for today.